My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate, teach, and put it in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. You know what this market loves? It loves transparency. Lots of executives pay lip service to the concept of transparency without ever really doing anything about it. But today, a day that started strong before giving up the ghost, Dow ultimately gaining just 12 points, S&P dipping 0.09%, NASDAQ advancing 0.06%, we saw a triumph of true transparency. I'm talking about Apple. Apple, which saw its stock jump 2% in the wake of a spectacular quarter. Back in November of 2018, Apple upset a lot of people when it decided to change the way it reported. Management told us they'd no longer break out the unit sales for iPhones, Macs, iPads. Why? Because the CFO, Luca Maestri, explained at the time the number of devices sold was no longer really a relevant metric in how to value the stock. Oh, the bears immediately came out in full force, arguing that Apple was no longer being transparent. They're obviously doing this to hide disappointing iPhone numbers. After all, why hide those numbers unless something's really wrong? I told you not to worry. And I said what I always say, own Apple, don't trade it. But the stock collapsed, falling from $222 down to $142 a few months later when Apple pre-announced a hideous shortfall thanks to a decline in their Chinese business. For a moment, it looked like the bears might be right. Maybe Apple really did go all opaque because its best days were behind it. You've heard that chorus. A few days later, I went out to see Tim Cook right at their headquarters to get a better sense of what was really going on. Well, he said he never felt better about the company. He told me he wasn't surprised by the stock's decline because the market can be emotional in the short term. But he reassured me that the pipeline has, quote, never been better, and the ecosystem has, quote, never been stronger. While it was too soon to reveal what Apple was working on next, he doesn't like to do that, Tim made it clear that I'd be dazzled. So would you. Then the iPhone 11 came out, and that's exactly what happened. Most Wall Street types assumed that this new phone would be nothing special. Number 11? I mean, come on. Yet it turned out to be Apple's biggest blockbuster yet. Why? As Tim Cook told me and Josh Lipton last night, the product is incredible. People love the battery life. They love the camera. Okay, look, it'll be a proud moment for a second. Look at this portrait of my wife, Lisa. Hashtag, of course, on iPhone 11. You know, it's just so great. I was one of hundreds of people who sent Tim Cook pictures that they took that were shot by true artists. It looks like, Annie Leibovitz. It looks like Eisenstadt. I mean, it's Arbus. And no, it's me. But the most amazing thing about this call last night, the growth of the iPhone itself, which was responsible for the stock's phenomenal surge today. Apple's now up 128% since everybody freaked out about this business a little over a year ago. Turns out Apple wasn't trying to be opaque at all when they changed the way they reported. The new pricing plan, starting at $35 a month for 24 months, they've made unit sales kind of a worthless metric, like Apple said it would be. Apple has nothing to hide. The phones are selling like crazy. Same goes for the supply-constrained AirPod Pro and the watch. In fact, the only line item that disappointed some people was the actual service revenue stream that everyone's so excited about, up 16%. We wanted 17%. Long story short, the people who bet that one of the most transparent companies on earth was trying to mislead us, have missed out on a stunning move. They couldn't have been more wrong. I hope you listened to me when I told you to stick with it. Hey, got that one right. I knew the bears were wrong because Apple has a tail. Every time the stock gets slammed, CFO Luca Maestri, he buys back the stock with both hands. He's actually like listening to this. Buy, 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 buy. I mean, the company retired nearly 7% of its shares count this last year alone. And since 2012, they spent $325 billion on repurchases at an average price of $129. By the way, that's 40% of the company's shares. Obviously, most of that happened when the stock got crushed a year ago or, years before the program started. But Maestri was in there buying back stock all along. And that's the tell. Companies don't spend massive sums on buybacks if they believe their business is collapsing, trying to hoodwink you. Apple is truly transparent. You just had to take Tim Cook at his word. And you could have made a killing on this one. All right, who else has embraced radical transparency? General Electric. Under its old leadership, GE seemed determined to obscure every single weak portion of its business, which is pretty much every single part of its business. I only took a year of accounting. But even I could tell GE's bookkeeping smacked more of fiction than fact. There was no way to understand how the company was actually doing. But then they got this new guy in, Larry Culp, with a traditional industrial background, and he realizes you need to be an alchemist to understand these numbers. When Culp pulled everything apart, he discovered the business was in bad shape. And you know what he did? He told us everything. It was incredibly dispiriting when he revealed how bad things really were. Culp didn't care that it looked bad because he's a straight shooter. So when a forensic sage wrote a 175-page report, I'm not even going to distinguish him by mentioning his name, about how the numbers were really crooked that he was putting out, Culp had a ton of credibility when he responded by purchasing $2 million worth of stock at $7 and change. He called that hit piece, quote, market manipulation, pure and simple, end quote. Correct. Culp was already working to right the ship, and sure enough, the stock has roared since it bottomed last summer. Then today, GE jumped more than 10% after the company reported an upside surprise. Results were excellent. More importantly, they were easy to get your head around. They looked like the numbers you'd get from an industrial. You had a huge winner, and all you had to do was believe Larry Culp, a guy who's given you every reason to trust, including that gigantic open market purchase more than 5 points ago. Final act of transparency, it's Boeing. Here's a company that reported a hideous loss today, yet its stock rallied more than $5. What fueled the move? Simple. Management stopped offering us bogus reassurances about the grounded 737 MAX. They stopped telling the critics to shut up. Instead, they gave you cold, hard numbers, like the fact that their backlog hasn't gone down. But Boeing also made it clear that they don't know when the MAX will be back in the air. And that's up to the authorities. All they can do is try to make the plane as safe as possible. At long last, they were completely candid. They just don't know. Hearing that was, frankly, a breath of fresh air. Sometimes transparency means admitting what nobody wants to hear, that the fiasco is costing billions and billions of dollars, because that's the price Boeing needs to pay if they're going to get this thing right. And they'll probably end up spending even more before this is over. Why did that very bad news allow the stock to rally? Because Boeing stopped treating everyone like idiots. We were tired of the hubris and the bogus certainty we kept hearing from the previous regime. It's not like this was a surprise. We knew the MAX is a disaster. We just needed to hear management be honest about it. The bottom line, investors want the truth. When we get the truth, though, you need to recognize it for what it is, or you could miss out on some tremendous opportunities. It's easy to assume everyone in this business is totally cynical, but taking that approach kept you out of some monster gains at Apple and in GE. Some CEOs have earned the benefit of the doubt, and you should give it to them. Oh, and while I'm at it, guess whom they have given the benefit of the doubt to this very evening? None other than Elon Musk of Tesla fame, who has gotten about as transparent as you could get. Well, maybe not as transparent as the other big winner, Satya Nadella from Microsoft. Joe in New Jersey. Joe.
Jim, thank you for taking my call.
You're quite welcome.
My question is on John Deere. With the first phase of the China trade deal complete, will it help the farmers? And how is the coronavirus going to affect the company in terms of Chinese consumption? And by the way, I own John Deere equipment, and let me tell you something, Jim. Nothing runs like a Deere.
I totally agree with you. I own Deere equipment, too. Nothing runs like a Deere, and the stuff is indestructible. Here's what I have to say. Forget the short-term machinations about China. What matters is Deere's a great manufacturer. Phase one is good for them. The ag market right now is weaker, along with all commodities. That's a great time to buy some stock of Deere. How about Miguel in Tennessee? Miguel.
Jimmy Chill.
You bet.
Booyah from Tennessee, my guy.
Jimmy Chill's being tried and tested by the Tesla people who don't realize that I like it. But go ahead. What's going on?
So the Royal Rumble just passed, which means WrestleMania is near. I know it brings a lot of entertainment success. Will it bring stock success for WWE?
Well, I'm not as much of a fan. Look, I liked them when they were on, but you know what? You want to play it another way? Let's take the derivative. Do Take Two, where I have to believe that Strauss-Zelnick has been able to capitalize on it more than almost anybody. How about Steve in Virginia? Steve.
Hey, Jim, I'll try and be real brief. I'm 57, recently retired, got a decent pension. I'm looking to add CSX to a well-rounded, solid, long-term growth portfolio.
I think it's very smart, but it's not a growth stock. What it is a company that's been able to figure out, even with revenue not doing well, how much money you can still make anyway with Precision Railroad. All you have to do is look at Norfolk Southern today, where by the way, the volumes were horrendous, and the company cleaned up. That's Precision Railroad. I think that means treating the customer the way the customer should be. Investors want the truth, people, and when they get the truth, you got to recognize it for what it is. Hey, oh man, tonight, the big game just a few days away. I'm focusing on the companies that can score big for your portfolio as my countdown to kickoff continues. Then, Penn National just bet on Barstool Sports. So should you be ready for Barstool branded casinos? I'm talking to the heads of the two companies to find out what the partnership means. And Stryker helps people get back on their feet. But can the stock run up on Wall Street, or is the recent decline a tad of a red flag? Don't miss my exclusive. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.